Good morning, everybody. It's Monday, August 19th, 5:26 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 1 3/4 at 394 1/4. November soybeans up 4 3/4 at 961 3/4. December Chicago wheat down 5 1/4 at 547 1/4. December Kansas City wheat down 3 1/4 at 551 3/4. December spring wheat down 3 1/2 at 605 1/2. Let's start off with the crop tour.
So Pro Farmer will begin its annual crop tour this week. Scouts on the eastern leg of the tour will start in Ohio. The western leg of the tour begins in South Dakota. After then touring Illinois, Indiana, Iowa, Nebraska, and Minnesota, the tour will release final crop estimates on Thursday night. State-by-state findings will be released each evening. The tour has been organized and hosted by Pro Farmer since 1993.
So they're going to start, this is a map from 2 years ago, but it doesn't ever really change. They're going to start on the perimeter and work their way into the central part of the Corn Belt. So today you're going to see stuff from Ohio, a little bit of Indiana, and then on the western leg, you'll see results from South Dakota and parts of Nebraska. The way this will work this year, in all likelihood, is like this. You're going to see the worst stuff reported today and tomorrow. And as they get closer to the central part of the Corn Belt, it's going to get better. You've got some drought in Ohio. You've got some problems in South Dakota, certainly in parts of Nebraska. But once they get into central, Iowa, central Illinois, that stuff's going to be really good. I'll be very curious to see what they find in southern Minnesota and northern Iowa. Those areas could be problematic. Certainly, the tour is very well followed. They'll be putting out estimates every evening. And if you want to get into the nitty gritty, you can follow people on social media that'll post photos and all sorts of stuff throughout the day. When it comes to the crop tour, there's a way to use the findings, and Pro Farmer actually had a nice write-up on their website. They had a frequently asked questions section. It said, how do I use crop tour data and results? And the answer is this. When you hear results from the tour, don't just compare them to USDA's August crop production report. Compare tour results to previous year's results to figure out how much bigger or smaller average yields will be. That comparison has proven to yield the most reliable analysis of fresh data. So don't take Pro Farmer's numbers and compare them to USDA and say, oh, USDA is wrong or Pro Farmer's wrong. That's not how it works. Compare Pro Farmer to Pro Farmer. We'll be talking about this every day this week. Tour begins today.
Fund traders continue to hold a massive net short position across the grain complex. CFTC released weekly commitment of traders data on Friday. During the week ending August 13th, the funds were net sellers of 4,000 contracts of corn. The net short of 253,000 contracts is historically large. Funds were net buyers of 2,000 contracts of soybeans. The net short of 155,000 contracts of beans is also historically large. And finally, funds were net buyers of 207 contracts of SRW wheat on the week.
Here's something interesting. So in this current cycle, the fund short, the net short in the corn market peaked at 356,000 contracts in mid-July. And now it's only 253,000. So the funds have covered 100,000 or more contracts worth of net shorts in the last, call it 4 or 5 weeks, right? Who's taking the other side of that? Why is the market at the lows when the funds have covered 100,000 contracts worth of shorts? The data would loosely suggest, if you look at the producer category that CFTC tracks, farmer selling is probably why the funds have been able to cover all these shorts without really moving the market. The producer category has added about 40 or 50,000 contracts worth of shorts during the same time frame. So it's certainly not a perfect explanation, but I think that's the explanation. There's still a lot of unpriced farmer-owned bushels, old crop specifically, and new crop. I feel as if the farmer is undersold also. And this is what happens when you run into big crops. I mean, we had a record crop last year. USDA's are going to have, they say, and I don't know if they're right, we're going to have the third biggest crop on record this year. So there's a lot of corn out there. And I think the farmer selling has capped the rally attempts. When you look at this in context, corn, soybeans, SRW, wheat combined, still a pretty darn heavy net short of 479,000 contracts worth of net shorts. And that was very little changed on the week.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about Friday's premium video?
This was out last week, grain marketing review and possible targets. As I have discussed at length in podcasts and on social media, I think a lot of you guys would benefit from a simpler and more transparent approach to grain marketing. I do this in the most transparent way that I know how. What I do is I advise cash sales, and then I track the sales that I advise. And what you see is a spreadsheet like this for every crop and every marketing year. I'll tell you what I advised, what the prices were, what the dates were, what the weights were, and then spit out a weighted average of what we've done. I've got my 2023 corn snapshot on the screen here just to give you an example, but we're doing the same thing for new crop corn. We're doing the same thing for 25, same thing for soybeans. We also do winter wheat. So if you guys are looking for a simple and transparent approach, this is as simple and as transparent as it gets. I don't think you need to overcomplicate your grain marketing. I think you need to go in the other direction. So if you guys messed up 2023, which a lot of people did, my stuff ain't perfect either. Part of what I do in the videos is explain what I did right and why it was right, and then what I did wrong and why it was wrong. Maybe you should check this out. Go to standardgrain.com. You can sign up this morning. I'll forward you a copy of this morning's email, which includes that video along with our 6 most recent premium videos. It's $50 a month. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. I promise. Give that deal a shot this morning, guys.
Summit Carbon Solutions carbon pipeline continues to face resistance. Summit will host 23 public meetings across Iowa this week in an attempt to win over landowners who oppose the project. The pipeline was originally slated to be operational this year, but landowner opposition and regulatory challenges have pushed its start date back to at least 2027. Iowa authorized Summit's pipeline plan in June, but now needs state permits after adding Valero to its route. South Dakota rejected the pipeline last year due to strong farmer resistance, but of course, Summit will be reapplying for approval in the state very soon.
This is an area of contention. I get it. You don't want the pipeline in your backyard. I wouldn't want that shit in my backyard either. At the same time, if they can get this thing going, does it ultimately result in improved corn prices or better demand? Yeah, it may very well do that. Lee Blank met with landowners in South Dakota last week, and he said they simply don't like us. So they're going to continue to face opposition here. And it seems like almost everything related to biofuels that we talk about keeps getting pushed back and pushed back. It's either delayed or there's just no information. And I don't know. You guys are torn on this, and I kind of am too, but that's the news.
Poor wheat crops in the EU made headlines last week. Due to excessive rainfall, the French soft wheat crop is projected to be the worst since the 1980s. Rainy weather hindered planting, hampered crop development, and increased crop disease. The French Ag Ministry is estimating the crop at 25.5 million metric tons, down 25% compared to last year. Germany's wheat crop is also slated to be poor due to large amounts of rain. The crop is forecast to decline by 12.8% to 18.8 million metric tons, the worst crop since 2018, according to Germany's Association of Farm Cooperatives. France is the EU's largest wheat producer, with Germany being the second largest.
Germany and France combined are about, I think, 35 or 40% of total wheat production in the European Union. And the European Union as a whole is the second largest wheat producer on the planet behind China. USDA did cut this projection. They went from 130 down to 128 in this month's report. Looking at world wheat ending stocks to use ratio, which is a very good gauge. It's the best gauge of supply and demand. It's actually, we're in a tight situation. I mean, relative to the last, you got to go back to 2014, 2015. Since the last time we were sub 32% stocks to use ratio. So the world wheat situation is actually tight-ish. I mean, I guess relative to the last 10 years or so. U.S. wheat is a different situation. We're going to be 42% stocks to use ratio according to USDA, which is actually the highest in 4 or 5 years. The U.S. is just not what it used to be when it comes to wheat and exports. We're not even a player in the export market anymore. You look at this chart, and this is U.S. share of global wheat exports as a percentage. Back in the heyday, 1970s, 1980s, the U.S. was anywhere from 30 to 50% of the global export market for wheat, and now we're 10%. So the U.S. is very much just a residual supplier of wheat on the export market. And I think that's part of the reason that these stories overseas just don't really impact the U.S. market in a lot of situations. When you get a big one like a Russian crop scare event that maybe actually could steer some business to the U.S., that helps. But we're just not the player that we used to be.
Federal Reserve Chair Jerome Powell will speak at Jackson Hole this week. Powell is expected to give confirmation of an upcoming rate cut in September. After last week's friendly CPI and PPI reports, a quarter-point rate cut is more likely than a half-point cut. Powell is also anticipated to map out any possible future rate cuts. Central banks around the world will be releasing rate cut decisions this week, including Sweden, the EU, Japan, and China.
So this is where all the big wigs meet up, and they have a big powwow in Jackson Hole, and they're going to talk about stuff that's more important than we are. Goldman said last week that recession odds are down from 25% to 20% during the next 12 months. The S&P has acted really well. We had a 3-day loss. It was really nasty, and I don't know if there was a great reasoning for it. Lost 6%, but now we've gotten all that back, and you're again within an earshot of all-time highs. So the markets, whether it's interest rate markets, stock markets, they will be hanging on every word said at Jackson Hole this week. What did cattle do on Friday?
It was an ugly day for the cattle market on Friday. Feeders were down $3.95 to $4.95 lower. Live cattle were down $1.22 to $2.62 lower. Cash cattle trade was also lower last week compared to the prior week. In the South, we saw cattle trade $1 to $2 lower at $1.85 to $1.86. In the North, fat cattle trade was $3 lower at $1.90. Box beef was mostly unchanged on Friday. Choice ended the day at $317.45. That was up 51 cents, and select ended the day at $302.59. That was up 56 cents.
Outside markets to start the week, pretty quiet. U.S. dollars just down a little bit. Stocks are mixed. Bonds up a little bit. Crude oil is down 73 cents, and the October WTI at 74.81. Have a great week, guys. We'll talk to you on Tuesday.